today's agenda is going to be, first of all, you will be able to learn how to start automated trading bot in just 5 minutes. Simple configuration, optimal for current market scenario. So you will be able to launch your, if you haven't yet ever tried automated trading and you've never launched any bot, that will be your first time. And in just 5 minutes, you will be able to launch your first bot. So I will answer on the main question probably, which is when is the best time to launch automated trading bots? So I will provide you with use cases, tips and clues, as well as when to close bots. So that's the question you ask yourself as soon as you launch the bot. When is the time to lock in profits? So I will show you exactly what are the instruments to secure your profits and to boost your trading performance. And finally, we will go through some optimal market scenarios to launch automated trading bots with different configurations. So we will go through the differences. What are the automated trading strategies that we currently have at Bitsgap? So we will cover everything today. So stay with me. We will start now. So first of all, we've implemented the artificial intelligence in our systems so that the algorithm is fully optimized, fully unbiased. Well, if it's possible to say like that. So that's emotionless trading 24/7, and the data generated from the algorithm, which is implemented in the automated trading bots, this data is then used for the complex analysis, and based on this analysis, we take the data and improve strategies further. So we are constantly working on the development of better systems for you to trade. And so far for today, we have a fully optimized trading strategy, which is called grid. And the idea of this strategy is that the bot automatically, simultaneously places buy and sell limit orders in the order book of the exchange. So in order to plot sell limit orders, the system requires you to have enough of the base currency on your balance, as well as in order to plot limit orders, buy limit orders, you must have enough of the quote currency so that the bot is able to place all of the orders in the order book of the exchange. So here's the example of Cardano trading to USDT, and you can clearly see that with a total investment of 228 USDT and having this set up, 2,255 Cardano is required so that the system plots all of these sell limit orders. Because in order to sell something, right, you must possess it, and that's why it is required to have, for this setup, 2,200. And the quote currency, 112. So the idea is basically that there is a trading range which you defined, or this system of Bitsgap automatically defines it for you each time you sell a cryptocurrency which you want to trade. So you have the highest sell price, which is the upper limit price, so that's the upper boundary, and the lowest buy price, so that's the bottom line. And within this trading range, you can have up to 180 limit orders, which are also known as grid levels. So from that point, I'm gonna call limit orders as grid levels. So you see, as soon as the price reaches, for instance, in this case, the sell limit order, the bot sells the base currency at the price of 11,500. So basically cashes out, and it takes this cash to place a new buy limit order below the current price, and by that it ensures an everlasting process of trading as far as the price stays within the trading range boundaries. So you see the profit here generated is exactly $250. So the first step, we took 11,500 from the market as there was a sell order, and then the system plots buy order. So we take out of 1100, 5,000, we take 11,250. So the difference in this case is 250. So that's the profit which goes directly to your pocket. So that's the fixed profit, all right? It's not the pending profit. It's not the unrealized profit. It's the profit which goes directly to your pocket, and you can use it to launch other trading systems, or you can manually trade, or you can withdraw this money, whatever you can do. So with the implementation of artificial intelligence in our systems, we've enabled bots to execute trades at the currently highest possible frequency rate. So you see that's the lend trading to Bitcoin. You see the chart, you see all of the trade executions where green circles, they represent buy orders, and red circles represent sell orders. So you see that for the period of, in this case, let me use the laser pointer. You see for the period of 83 days, it has managed to execute 18,500 trades. So that's 220 trades per day, 24/7, emotionless. So that's unbiased, and you don't have to stay in front of the computer 24/7. You just have the system which follows the algorithm, which follows your plan, and keeps making profits. It basically extracts profits from the market regardless of its direction. It just looks for the opportunities to buy low and sell high. And here's the icon trading to Bitcoin. So that's on average 153 trades per day, same period as in case of the lend. So it's not only about the volatility of the market, it's also about the configuration that you've used when you launch the bot. And about different types of configurations that you can use, we will discuss later in this webcast. So I will provide you with tips and clues, and that is why stay with me. Just let's follow the plan so that you grasp the whole information as it's supposed to be. So that's the consistent profit inflow. That's the third advantage of the system. You now know the idea of this strategy, and so each time it sells, it executes order, it takes profit from the market. So these can be small profits, but all together combined, they make up a decent return in any case. And you see the profit generated is regardless of the market trend. So you can have a sideways market, you can have a rising or falling markets. The bot just keeps making profits in the quote currency regardless of the market direction. And most importantly, you can always backtest the strategy before launching the bot using your real capital. So that's the cool feature that we have at Bitsgap, is that we have the demo mode, which is an absolutely risk-free trading simulator where you have basically virtual money to trade with. And you have the backtest feature, which allows you to backtest the performance of the bot. So in other words, what would have the bot generated for you for the selected period of time in the past? So let's say you've launched the bot 30 days ago. Yeah, so the profit for, in this case, that's basic attention token trading to USDT would be 15%. So for RVN, that would be 16%. For ontology trading to Bitcoin, 10%, and for BDT trading to BNB, that's 8%. So you can always select the date range. You can backtest what would be the return if you would have launched the bot 7 days ago, or 14 days ago, a month ago. So you will get this information which you can use for your decision making process. So backtest results, they do not guarantee future results, but at least you can use this information to use as a benchmark. All right, so you get the average return for the selected cryptocurrency pair. Well, and you can at least expect pretty much somewhere closer to this return, maybe next week, 2 weeks. So that's the data you can use to make projections. So now is the time to launch our first bot. So we will go straight to the platform, and you see I have already it opened, and you go to bot section. Well, first of all, you log in, then you just click on bot section, and here we go. You see we have the chart on the left side of the trading desktop, which you can zoom in and zoom out. Most importantly, you have here built-in toolbar of the technical analysis instrument. So no need to have TradingView platform open, because you have it already here. So you can conduct your technical analysis already here. So you have here the Fibonacci retracement levels. You can draw anything you want. You can plot resistance and support lines. So basically all the tools that you need, they are built in here. So on the right side, there is a panel which is basically the configuration panel. And you see now on the chart, I have my active bot, which is Cardano trading to USDT. But let's use recommended strategy. So here is the list of top performance of the last month. All right, so it seems like, well, actually it looks like Key trading to USDT is the top performer of the month. So you can already use these recommended strategies for your consideration, to at least consider these coins for trading. All right, just based on their backtest results. That's why we call it recommended strategies. You can also sort them by weekly basis. So it turns out that on a weekly basis, DOT trading to USDT is the top performer. And that varies depending on the selected cryptocurrency exchange. So right now, first of all, I'm in the demo mode. So the money you see here is the virtual money, which I use to experiment absolutely risk-free. So I can do whatever I want with this money, just to optimize my trading and to find out what is the best trading setup for me to use for real money trading. So here you can select the exchange, and in the demo mode we have several exchanges already linked with virtual money, but we will stick to the Binance just to make it simple. It's like the most liquid cryptocurrency exchange as of today. So let's say we've selected Icon trading to USDT. And you see automatically the system assigns the trading range. So that's the setup it recommends, which I can adjust in any way I want. So I can drag the upper limit price to make my sell side wider, for instance, or I can make it narrow. Same I can do with the lower limit price, which I can drag higher. So that can be a configuration. So these are here, you see two strategies, the S bot and the classic bot. So the difference between the two is that for the classic bot, the system proportionately distributes investment in terms of the same amount purchased at each buy limit order. So the parity here is in the amount of the base currency it buys from the market. And that's why the total investment value varies. So you see, depending on the price, amount is the same, but the investment value is different. Whereas if you choose the scalper, which basically originated from the classic bot, here you have the parity in the investment value. So you see the amount can be different depending on the price. So the system ensures that it spends the same amount of investment per each buy limit order. So the lower the price, the more of the base currency it will buy. And same applies is if the price is higher, then in this case it will buy lesser of the base currency. But by that it ensures that the total investment value is the same for each grid level. All right, so that's something for you to consider. And let's just come back to the platform. So now, as we selected the cryptocurrency pair, now is the time to define the trading range. So let's assume that here I'm looking at the chart and it pretty much looks like a sideways market. So in this case, I will define my trading range by the support and resistance lines. So I'm not doing the complex technical analysis as of now. It's just for you to understand how you can apply the logic for the trading range. So let's say I decide that my support is established by this higher high and this higher high, so that's going to be my place for the upper limit price. So this looks like possible configuration for me to launch. So it's optimal to use this configuration if you expect the market to fluctuate in the sideways market. So you expect the sideways continuation. All right, so now is the time to define the grid quantity. So the more grid levels you plot, the more investment is required, because the minimum requirement for the trade size for each level is, according to Binance, is 10 USDT. So when you plot 10 grid levels, the minimum is already 100 USDT. All right, so that's why the more you have grid levels, the more investment is required. And you see that, by the way, the more grid levels you have, the narrower is your grid spacing. And grid spacing stands for the distance between the grid levels. So that's the space that you see, that's exactly the grid spacing. I can reduce this amount to, let's say, 70, and that is how I now have a higher grid spacing. Let's say I want to have only 20. So now my grid spacing is increased to 1%. So the distance is now 1%. And you see, as I now have only 20 grid levels, with this investment I can launch the bot. But before that I had 145, which required you to have at least 1,800 USDT. If you don't have this amount at your disposal, you can always click on adjust grid quantity. So the system will automatically assign you optimal amount of grid levels to launch with this investment. All right, so now having 116 grid levels with this trading range, you can successfully launch the bot. Most importantly, you get the information here of your investment distribution. So that's the total investment value. So you see that the base currency required is 1,900 icons. So that's, according to our configuration, that's around 70% of our total investment, whereas only 450 USDT is required. It is required to plot all of the buy limit orders. If I change my trading range, and let's say I have now narrow buy side, sell side. So you see how it has automatically reduced the amount of base currency required. And here I have features like take profit, stop loss, and trading up. But just stay with me. We will go through these instruments step by step. Now, all we have to do is just click on start the bot. We click on start the bot and you see that the system automatically notifies us that as we don't have this amount at our disposal on our balance, and here you have the balance to check if you have icon. It looks like I don't have icon, so that's why the system notifies me that I should buy it. And you can buy it using this market order, which the system will automatically plot, or you can actually go to the trading desktop and use the smart trade order to buy required amount of the base currency with the limit order, because as we all know, you pay more for the market order because of its first priority, whereas for limit orders you have a reduced commission that you have to pay on the exchange. So that's something you can also consider in your expenses management. So, but just for this example, let's assume that I'm in a rush and I don't have time to plot limit orders because it really requires to spend some time. I just want an instant action, so I'm gonna click on yes, buy, and you see that the system automatically plots by market by order, it fills it, and now I have my icon trading to USDT set up in the list of my active bots. So here you can see all information about all of the active strategies that you have. You have the investment value, you have the trading range, and you can actually click on every trading setup to see the trading setup and all of the trades executed on a chart. You can click on view to get the precise information, like grid level by grid level. So you see all the data, all of the open orders. So everything you need is actually here, as well as what is the amount of the base currency currently in open orders and the quote currency. So now let's continue. So you have this metric which is known as investment change and the bot profit, which is kind of confusing even for traders that are using Bitsgap for quite a long time. Let me just explain you what makes investment change different from the bot profit and what actually unites these two metrics. So what you really have to understand here is that investment change takes into account the bot profit. So the profit generated by the bot is already priced in the investment change, whereas the investment change is also affected by the value change of the base currency, because the market is volatile, it fluctuates. So it can be that the base currency currently in your open orders can be affected by the rising market. So that's going to be positive effect. Whereas if you have base currency in your trading setup right now and the market is falling, then in this case the value of your base currency is depreciating and hence your investment change is falling. And here is a perfect visualization that I've created. So that's BitTorrent trading to USDT, and you see the investment change is 12% and the bot profit is 8.5. So the first way to actually calculate what is your current profit and investment value, you can do it by simply multiplying your investment by the investment change. So that's actually almost 400 USDT multiplied by 12%, and that's going to be your current investment value. So in this case, if you deduct from the current value the initial value, the difference is the profit generated. Or there is another way to calculate it, just to check. You have the amount of open orders, so you see that in this trade we only have the quote currency, and that's 414. So that's the investment currently in our active bot, and all we have to do here is just to add generated profit by the bot, and that's going to be the exact value as we had in the first method, and the difference is the same. So once again, what is driving the investment change is not only the bot profit, but the value change of the base currency as the market is constantly moving upwards, downwards, so it is always affecting your investment change. So now is the time to discuss what are the optimal scenarios to launch Bitsgap automated trading bots to maximize your returns and to secure your profits. So here's the market scenario where you see a rising channel formation, and the logic of this formation is that the price bounces off the support level and then reverts from the resistance line. So that's the exact formation, rising channel, and you see the price is now over here. So according to this formation, you expect the price to again hit the resistance line, then revert from it, and probably again fall back to the support line from which it will bounce off, and hopefully, you see, according to this one, it breaches the resistance line and then goes higher. So that's what you are looking for, and this is the trading configuration optimal for this particular market scenario. So you see, first of all, bounce off, which is kind of a confirmation that the support line sustained. So now you can launch this grid setup, and notice that you have a narrow buy side. So that's just in case if the price again falls back to support and then bounces off it to go and hit the resistance line. So that just in case it will fluctuate in this zone. Whereas you have a wide sell zone because you expect the market to actually go higher and to hopefully breach the resistance line. So this is the setup that is optimal for such market formations. And the stop loss you plot below the support line. Well, actually that's up to you. It can be a fixed stop loss, or it can be stop loss which is below the formation where the logic is in other case just breaks. So if the price breaches the support line and goes lower, so that means that the rising channel is no longer valid. So that's why having a stop loss below this formation makes sense. So by that we secure our profits and secure ourselves from the falling market. So you see exactly that's the exact formation, but I just zoomed out the chart and you see how it went upwards. It reached the resistance line, reverted, and then again reached. So you see during this period you would have generated profit. And what I found out is that actually top 20 cryptocurrencies in terms of liquidity, they tend to respect support and resistance lines. So it doesn't matter if you are a momentum oscillator trader using indicators, or volume profile trader, or waves trader, whatever. There are many types of instruments, technical analysis, dogmas that you can apply, but support and resistance lines is what you should consider always, because it turns out that regardless of the cryptocurrency market immaturity, it does actually respect support and resistance lines. So you should at least consider them at technical analysis. So here's another optimal scenario, and I will give you the exact optimal grid configuration for your bot. So that's the sideways market, and you see we have a trading range here, and again it respects the support and resistance line, so it bounces off the support and then reverts from the resistance. And as soon as you see this kind of formation where the price is somewhere in between, you can actually launch this trading setup. So you have a 50-50 split. So by that you expect the market to continue its sideways movement, and eventually you expect the price to breach the resistance line. And that's, you see, actually what happened later. It went upwards, then again downwards, and then upwards. So you see it respects support and resistance lines. It's not always like 100% it will respect. It can be the case that it will breach the support line because of the selling pressure, but it turns out that these support and resistance lines, they are the strongest psychological price barriers on the market, which you can consider in trading. So you see, in the long-term perspective, you are looking for such sideways formations on a rising market because you want to follow a trend, and as you know, trend is your friend. So it's most likely that the price will breach out from the formation, it will breach the resistance line as the market is in general rising. All right, so that's something you're looking for. You see sideways formation, you enter the sideways formation with the setup that I've just provided you with, and you then later expect the price to breach the resistance line, and by that you ensure that you will generate all of the profits on the rising market. So these are two cases. That's Neo trading to USDT, and these are perfect market scenarios to launch the bot on the sideways market with an expectation of the rising market continuation. So on the rising market, you are not only affected by the bot profit. So the bot, as I already mentioned, regardless of the market direction, it will always find these opportunities to buy low and sell high. So by that it will ensure a stable, consistent profit inflow into your pocket. But as well, the value change of your base currency, and that's the BNB trading to Ethereum, BNB is also appreciating on the rising market. So in this case, you have this double effect, and that's what I call active investment change. Because you have the value change, which is appreciating on the rising market, and the bot profit, consistent profit inflow. And that's once again what I call investment change, active investment change. And on the sideways market, you see the idea is to earn during this stagnation. So meanwhile, the rest HODL traders are waiting for the price to go higher. So they don't have automation to generate profits during this period of stagnation. You are actually making money. And here's the exact example. You see HODL, which represents a price and the point of time at which an ordinary trader, people call them hodlers because they tend to buy cryptocurrency and just hold it on their balance, expecting in the future the price to appreciate. And so it just kind of lies in your portfolio and you don't exploit your assets as you should be. So if you would simply buy in this case that's Bitcoin Cash, if you would simply buy it at that point and wait up to that current price, so you would be only up by 5%. So your investment change would be plus 5%. So that's the simple HODL strategy. Whereas with automation, you let the bot to generate profits on all of these market swings during this period of stagnation. And in this case, you get almost a triple effect. So with automation, your investment change would be 14%. All right. So that's the exact visualization example, how the automated trading outstrips HODL strategy. And finally, instruments that we've developed at Bitsgap to boost and secure your profits. So the first one is actually the trading up feature that you've already noticed as I was explaining you how to launch bots, and that's over here, trading up feature. So the idea of this instrument is to have your trading range follow the upside momentum. So you see, your trading range is defined by the upper and lower limit prices, and as soon as the price establishes new higher high over here, your trading range will follow the market because you have this trading up feature on. And again, let's assume that the price again establishes new higher high. So what's gonna happen here is that the trading range will adjust accordingly. But what happens if the price breaches the lower limit price, like in this scenario? In this case, the trading range will not follow the market depreciation, so that means that there won't be any trades executed by the bot over here. But if the price eventually returns back, so it makes a comeback, in this case the bot would be able to start trading for you again. And let's assume it establishes then later new higher high, so by that the trading range will ensure it follows the market accordingly. So that's what a trailing up instrument provides you with. And here's the example of NG trading to Bitcoin. That's actual trade that I had. And you see that my trading range was initially defined by this zone, represented by these yellow lines. And I actually had my trading up feature on, so that means that as soon as the price breached the resistance line over here, my trading range started to follow the market, and that's why you see all of these circles on this upside momentum. So these are all the trades executed by the bot, and as of now, well, actually as of the time I made this screenshot, my trading range was over here. So spot the difference. Without a trailing up feature on, you would just get stuck here and you would miss this upside momentum opportunity to generate profits. And with trailing up feature on, you enable the trading range to follow the market, and you by that enable the bot to generate profits for you regardless of the market direction. And that's the example of IOTA trading to USDT, but in this case without my trailing up feature on. And you see, I simply got stuck in this area as the price breached the upper limit price, or as I call it, resistance. And you see that the market is now trending over here slightly higher, but none of the trades were executed by the bot during this period. So that's because my trailing up feature was off. So by that I actually skipped my upside momentum opportunity. Another feature is actually that we have this built-in algorithm that's kind of unintangible feature known as cost average. And by that I mean that when the market is falling and you have your automated trading strategies on, it can significantly reduce your losses. So again, example with the ordinary HODL trader who just buys cryptocurrency and waits for the price to go higher. But you see, it purchased it at that price that was quantum at that point of time and at that price, and down to current price, you see he has a minus 6.88% of a loss. Whereas with automation, you have only minus 3.18%. And that's because of the bot profit generating profits on a falling market, because remember I mentioned that it keeps making profits for you regardless of the market direction. And you see this bot profit generated during this falling market is priced in the investment change. It basically offsets the negative value change. So that's why we only have minus 3% instead of having almost 7% compared with a HODL strategy. So finally, what are the exit strategies apart from stop loss that I already demonstrated? We have the break-even feature, cancel orders, market exit, so that's the exit from the market using the market order, and take profit. So all of these 5 features, we have 5 exit strategies. So let's go through some of them which I find very useful. The first one is a break-even exit. So the break-even exit stands for this strategy when you want to exit from the market having a 0 of the investment change. So instead of having a loss, you want to at least exit from the market with 0 losses. All right. And in order to do that, you see here's the example of Cardano trading to USDT. The market is falling. We are now bearing a loss of a minus 0.92%. And if you click on close, and you will find this button over here, close. When you click on close, you have some options here. And for the break-even strategy, you click on this button, and you see that the system will place a sell limit order at a break-even price. So that's the exact price at which, if the market eventually hits this price, at which your investment change is going to be 0%. So that means you will exit the market with a 0 loss. And you see the price of break-even for my Cardano trading to USDT is 0.127. So that's exactly over here. So as soon as the price hopefully reverts back, so it bounces off this level up to break-even, as soon as it reaches this break-even price, the sell limit order will be executed. So by that, you have a 0% of a loss. So that's one option to exit from the market. But the risk here is that the price may not reach the break-even price. All right. So it also depends on current market formations and what are the odds in favor of the market moving upwards, reaching this break-even price. It can be that due to technical and fundamental analysis, it looks like it won't be possible, so you'd rather close the bot using other exit strategies. The stop loss, that's the one that we already discussed, but I just need to show you how to use it. When you click on when you click on view, you have this new panel. Let me show you. You click on view, and here we go. You have trading up, stop loss, and take profit. So you switch the stop loss and assign the exact price at which you want your stop loss to be set. And as soon as the market reaches this stop loss order, it will automatically sell all of your base currency with a market buy, or with the market sell order. So this is the price at which you will minimize your losses. So below that price, you won't be affected because you canceled your trade at that point. So by that, you minimize your losses. So let me show you some other examples that we actually have here. So when I click on close, and for instance I have Cardano trading to USDT, when I click on close, I have other options like cancel all open orders. So if I choose this option, the algorithm will just cancel all of the orders that I currently have. And you see I have 14 orders for this strategy. You see I only have 1 buy and 13 sell orders. So if I choose this cancel all open orders, it will just close all of these open orders, but the amount of the base currency, in this case 2,900 Cardanas, will be left in my balance. All right, so you will be still affected by the value change of the Cardano. If you don't want to be no longer affected by the value change of Cardano and you want to have a 100% exit from the market, then a sell at the market price is what you are actually looking for. And using this exit strategy, the system will sell all of the base currency, and that's exactly 2,900 Cardanas to USDT. So no Cardano will be left in your balance. All right. Well, the third option is break even, already discussed. And the final is the take profit. So the take profit is basically you assign a certain percentage at which you want to close, at which you want the bot to automatically close the strategy. And the take profit is here in terms of the investment change. So let's say I plot 10%, and let's say I have 10% for my Cardano. So as soon as the investment change is going to be 10%, it will automatically close the bot, and it will of course sell the base currency. And if let's say I have 15%, so as soon as it reaches the 15% of the investment change, it will automatically close the bot. If you haven't assigned the take profit stop loss at the time of your bot configuration, then later, as you have your active bots here, you can always switch on and switch off the trailing up, stop loss and take profit, as simple as that. So it can be that you are in a rush and the market is extremely volatile, it's moving like crazy, and you don't actually have time to set all of these take profit, stop loss and trailing up. Then you just initiate the bot and later you go on view and assign all of the features that you previously wanted to plot. So everything is here for you at your convenience. And finally, the last feature is what are the sources of trade ideas. And you already remember that we have recommended strategies based on backtest results. So just based on top performers, you can choose those cryptocurrencies that are optimal for your strategy in terms of risk to return ratio. And the way to actually kind of calculate these risk to return ratios, you can use a backtesting feature that we have. So that's the entire instrument we've developed. Let me show you. So as soon as you select a certain cryptocurrency, and let's say AGI trading to Bitcoin, you want to backtest this cryptocurrency. So you click on show backtesting results, and here you have a date range. You see it's already defined by a 7 days period, but I can actually change it. Let's say I'm interested in the period from the 1st of August up until today. So that's going to be 27 days. Let's just give it some time to calculate. And it can be, yeah, so you see for that period, the bot managed to make 200% in the quote currency. So that's the profit generated in Bitcoin. All right. But what I'm also interested in is what was the upside momentum, like the highest swing and the biggest fall. So I take the instrument and I'm gonna use the forecast. So you see we started trading from that point and the highest price was over here. So you see the potential was around 90%, all right? Whereas down to current price, from the highest price to the lowest here, minus 26%. So in terms of risk, the risk here from the highest price would be minus 26%, all right? So you have now three metrics: the upside momentum, 87%. The bought profit in the quote currency for that period is 200%. And the risk from the highest price, so that's the point of your maximum loss at this case, is minus 26% of the value change, of course. And you can now remember these metrics and compare with other cryptocurrencies for the same period of time. So let's say now I'm interested in ELF trading to Bitcoin. I click on show backtesting results. I'm gonna select the 1st of August, same as we did for the AGI. And what was the return in this case? And you see the return in bought profit was only 30%. So that's a significant outstrip of the AG trading to Bitcoin, and such an immense gap between two cryptocurrencies. And the upside momentum, in this case, it was, let's see, forecast. So that was around 40%, and remember for AG we had around 90%. So even in the terms of value change of the market appreciation, the AGI coin significantly outperforms the ELF coin. And the risk here, in this case, from the highest price to the lowest over here was minus 21%. So the risk here is a bit lower compared with the IG coin, but still is pretty much the same. So it's definitely that the AGI is gonna be your choice because it has managed to make 200% in the bought profit compared with 29 that ELF made for this strategy. And the upside momentum for AGI was almost 3 times bigger. So that's how you can use backtesting as a source of trade ideas, and you can find those cryptocurrencies that have historically proven to be optimal for your trading strategy, because it can be that you are risk averse and you rather looking for those cryptocurrencies that provide smaller returns, but for that smaller return you have a minimized risk. All right, and it can be that you are aggressive traders and you are ready to risk. So in this case, such cryptocurrencies as AGI that you just saw, which had around 200% in the bought profit just for the period of 27 days, can be your choice. All right, but for that profit you must take into account possible risk, and that was minus 27% of the value change. All right, it doesn't mean that your loss potential would be minus 27%. It's not, because you remember we have this built-in feature of loss minimization on the falling market. All right, and it would never be minus 27%. It would be around minus 10%, maybe 15%, but not 27. So these are all the features that you should take into account when you are making decisions regarding what are the cryptocurrencies to trade today, tomorrow, which cryptocurrencies you should avoid for now. All right. So, and what we have enabled at Bitsgap is that we have this built-in security mechanism which allows us to avoid extreme pump and dump scenarios. So on the left side you see a chart of GRS trading to Ethereum, and you see as the price swings higher significantly, so by that all of the buy limit orders, they just got stuck here. They were executed at the highest price, and that's something that you should avoid. All right, you don't want to buy at the higher price. You want to buy at the lowest price to sell it later at the higher price. And it can be sometimes that due to low liquidity of some cryptocurrency pairs, it can be that the market of this cryptocurrency is significantly affected by extreme pump and dump scenarios. So with this feature that we have, we actually enabled, like, it's not 100% guaranteed, but it is always, I mean, it's constantly developing the system as we have this artificial intelligence power by generating the data and looking for optimal configurations, for better configurations to increase the odds to spot such pump and dump scenarios so that you won't be affected by them. And right now we have this optimization, and in most cases it actually avoids pump scenarios, and by that it ensures that you have a smooth profit generation, and you are not affected by this extreme pump and dump scenarios on the market. So with optimization that we have, you wouldn't get stuck at this highest price as in case of here, where there is no optimization. And that means that here your investment change won't be affected, but here it would be significantly affected, because you see eventually the price returned back to its initial level, and from that point down to this, that's the huge loss actually. So with optimization that we have, we protect you, not always. All right, it's not a golden algorithm which by 100% always detects such scenarios, because the market is always evolving and we must keep up with this market, but still we have this optimization for you. So yeah, but that's it for today. I've covered all of the topics that I find crucial as of today. And so what is left is basically some tiny features, like how to switch to real account, and you just click on your avatar over here on the right side of the panel, and you just deselect the demo mode. Yeah, just okay, go away. You see, because I have this notification, I was not able to deselect the demo mode, but you just deselect this button and the system automatically redirects you to your real account. And just to prove that I'm actually also using the Bitsgap system and I'm constantly trading, then you see there is a history that I have here. So these are all of the trades that I have, and you see I've actually closed 2 trades today as I saw the market losing its upside momentum. So for BNB, for Link, I just closed the bot. And when you go to the history, you get the information of your past trades, so you can always memorize what was the trading setup that you used to stick to. So what was the amount of grid levels that you used to trade. And by the way, regarding the grid levels, like the grid spacing. It can be the case that when you have a setup with so many grid levels, your grid spacing is so narrow, and by that you basically enable the board to capture almost every tiny market swing, all right? But with such a small grid spacing, your profits are also tiny. But even though there is a high frequency, as you have 170 orders, so that means that most likely on a daily basis you will have around 150 trades. So you can use it as a benchmark to estimate what can be a daily return based on your investment. But by this setup, you ensure that the bot actually captures all of the market swings. But the price for that is a reduced profit, all right? Whereas when you have a wider grid spacing, and that means you have a bigger grid spacing, that means that your marginal profit is gonna be higher, but the chances that the price will hit all of these grid levels is reduced, all right? It can be that the price reaches the buy limit order, and let's say your buy limit order was around here. So you see the price reaches this buy limit order, and let's say that your stop loss according to your trading setup, your sell limit order is around here. And you see that the price then eventually moved upwards, but it didn't actually trigger the sell limit order because the space was not enough, all right? Whereas when you have more grid levels, and by that you have a narrow grid spacing, most likely your grid spacing would be somewhere over here. So if you had, let's say, 30 grid levels, and with this setup, the price would actually trigger the sell limit order, and that would be your take profit in this case. But with this setup that I've just shown you with only 10 grid levels, you see the price didn't actually hit the line, so that means you didn't take the profit from the market. So that's something you have to take into account. Depending on the volatility of a particular cryptocurrency, your trading configuration can vary significantly. So, and you can actually experiment using the demo mode before launching any real bots to find out what is the optimal grid spacing and the grid quantity for a particular cryptocurrency for a current market condition, all right? So yeah, there is no golden rule of what is the final optimal grid quantity setup, because cryptocurrency market is extremely volatile. Some cryptocurrencies are, compared with other, have bigger market swings, so that means that most likely you will be able to launch a trading strategy with a wide grid spacing, and by that you will get a higher marginal profit. But it can be that the volatility of a certain cryptocurrency is not enough, and that's why you should rather stick to a trading setup having more grid levels, and by that you ensure that the bot is able to capture all of these tiny market swings, all right? But even if you have a narrow setup or a wide setup, added up together, these results in decent returns in any case, all right? So you see, for the 41 days period, my investment change for land is 32% actually, and the bot managed to make 1,000 USDT. So the investment of 3,000, and to that investment it has managed to make 1,000 of USDT. So that's the profit which goes directly to my balance. So that's something that you are actually looking for, and this is a very appealing profit. And in a long-term perspective, you can achieve, well, from my experience, up to 250% if annualized, all right? But it depends case by case. Just use the trading simulator to experiment, to find your optimal configuration, to find what are the technical analysis instruments you'd rather stick to, which provide you with more insights, and you'd rather stick to them to base your trading decisions. So you have all of the instruments at your disposal to experiment and to trade absolutely risk-free before risking any real money. And we have the YouTube channel providing you with some short videos with tips and clues, as well as weekly webcasts. So I make sure that each week I provide you with new data, new insights, improve the quality of the webcast. So yeah, thanks for your attention, and let me now just see what are the questions that are left unanswered. Well, as I promised, I will select only top interesting questions, but so far I see that the Erwin has managed to provide you with quite meaningful answers already, so thanks, Erwin. So yeah, there is a question from TQOPS. The stop loss actually sells everything in loss when it is touched. Well, it's not always the case. Of course, if your investment change is currently in the negative zone, then by plotting a stop loss, you will actually lock in a loss, right? But you see, I have lent trading to USDT, and for which I can now plot a stop loss. And let's see, where is my stop loss for this particular cryptocurrency. So the price was, lent trading to USDT 0.386, the stop loss. So it is over here, all right? In any case, I am trading this cryptocurrency for quite a long time. Even if the price falls to that point, I will have a positive return. But let's see if we have the possibility to change the stop loss to a higher, let's say 44. And as of now, we don't have this feature to plot a stop loss higher of your lower limit price. So as of today, we have this possibility to only plot stop loss below the trading range. But yeah, that's something to be considered in the development, whether we will add this feature to plot stop loss within the trading range later, so that the price, if the market starts to fall, then but at least with the stop loss plotted within the trading range, you secure your profits. All right, so that's, yeah, a good question and a good feature to be considered. So what should you do with the investment change if it is negative, and how to manage it without the stop loss? So you see, I've provided with you with other features like the break even, all right? And the break even, if you remember, is the strategy to exit from the market at which your investment change is going to be 0%. So it means that you place a sell limit order automatically at a break-even price. So that's the price at which your investment change is going to be 0%. And for this setup, that's icon trading to USDT, you see my break-even is this price, 0.5812. So as soon as the price reaches this level, which is over here, my investment change is going to be 0, and by that I avoid any losses. All right, but there is no trading configuration that will always bring you profits and you won't be affected by the falling market. But at least we have all of these features, even built-in features, that minimize your losses on a falling market. And I also provide you with optimal market scenarios to launch the bot with the exact grid spacing and grid levels configurations. So remember the example with now, I think I had, where I was looking for here it is, where I was looking for the sideways formation on a rising market, which has higher chances of the price breaching the resistance line. So that's the configuration you're looking for. So you should follow the trend, guys, all right, and always stick to some basic principle of risk management. Do not risk 100% of your balance. Just maybe 5% would be enough for a certain strategy of your balance. And you say if you allocate 5% of your balance to a certain strategy and your stop loss is also fixed, and by that you ensure that you will never lose more than 5%, you will actually lose, if the market starts to fall, you will lose much less than 5%. All right, so applying these features like stop loss, take profit, following the market, following the trend, applying technical analysis, looking for market scenarios optimal to launch bots will enable you to maximize your profits in a distance. All right, diversification of trading strategies, and actually you can trade manually as well. Diversification is the key here as well, but that's the topic of another webcast, which I will maybe host one day. But as of today, all features explained, and now you are able to launch your bots, to experiment, to discover and sharpen trading skills using the demo mode. And once again, thank you for your attention. I appreciate your time, and provide me with the feedback. Just scale this, rate this webinar from the scale of 1 to 10, just for me to know what is your overall feedback. And that, if you have some questions unanswered, then please provide with your questions here. You have the chat box on the Bitsgap page. If you have some questions unanswered, you can write them here, or you can join Bitsgap Telegram chat, where we have our friendly community of experienced, of beginner traders, of professional investors and traders who will gladly provide you with their tips and clues. So feel free to join. Go to the YouTube, we have some videos there, we have previous webcasts. So I wish you profitable trading. Stay safe,